Good afternoon, everyone, and welcome to Wolf & Company's Fintech Forum Virtual Roundtable, the first event of our three-part Financial Leadership Series events. My name is Stephanie Creedon, a Senior Marketing Specialist at Wolf & Company, and I will be your host for today's event. First off, I'd like to thank everyone for joining us on one of Boston's most monumental holidays, St. Patrick's Day. So happy St. Patrick's Day, everyone, and unfortunately we aren't able to celebrate in person, but I hope that each of you received your very own Wolf Guinness mug, bottle opener, and coaster. The good news is by the end of today's event, it will be just in time for happy hour and we can put those mugs to good use. For anyone who may not have received one, please reach out to me and I will be happy to send you one to your preferred address. But before we start today's event, I just want to give a brief background of Wolf & Company and the event itself. Wolf & Company is a certified public accounting firm offering a full spectrum of services in assurance, tax, risk management, business consulting, and wealth management to private and public organizations and individuals. We leverage over 100 years of expertise to address business challenges of today, combining industry expertise with service specialization to provide your organization with insight, opportunities, and solutions, allowing you to address your unique business needs. So, over the last few years, our Technology Leadership Conference has brought together financial industry experts to collaborate, learn, and communicate about the latest ways technology has impacted institutions around the world. Based on the successes of these events and great feedback from our attendees and advisory committees, we've recognized that the goals and strategies we cover encompass far more than just technology. That's why we've re-imaged the event as the new Financial Leadership Series, which will offer multiple events, bringing together financial institution leaders looking to drive their strategies into the future. The series will include 2 virtual roundtables, one being today, and our second one on June 23rd, and 1 annual summit, which is scheduled for November. Our experts and executives from institutions across the country will gather to discuss how you can integrate all elements of your business operations to support your initiatives and success. We hope you find today's event to be valuable, interactive, and impactful to your bank strategy. But before we get into today's presentation, I'd like to review some housekeeping items. The format will be structured as a Zoom meeting. We ask all attendees to remain on mute throughout the presentation. For the best view of today's presentation, please select Speaker View at the top right-hand corner of your Zoom window. All of the panelists will be spotted during the roundtable. The panel presentation will last a little over an hour and we'll have plenty of time to answer questions at the end. If you'd like to submit your question, please do so at any time by using the chat box at the bottom of your Zoom control panel. Please direct all questions to myself or Rich Fay. After the panel, we have allotted some time for breakouts. For this portion of the event, we'll be diving into the breakouts, and we recommend you keeping your video and audio enabled and encourage you to take this opportunity to share your stories with your peers to help learn from one another about your trials and upcoming FinTech initiatives. All attendees will be eligible for 2 CPE credits today, and to receive them, you must participate in the entirety of the event. Please be sure that your full name is included in the Zoom participant ID in order to receive your CPE credit, and you will need to have your name listed in order to do so. The presentation will be recorded and available at the conclusion of the event, and attendees will receive a copy of the presentation and the links in a follow-up email. So without further ado, I'd like to introduce today's panelists. Pete Chapman, EVP of Growth. Karen Moynihan, CEO and co-founder of Boss Insights. Dan O'Malley, CEO of Numerated, and Greg Wolf, CEO and founder of Fiverity. And moderating today's panel is our very own Rich Fay. Rich is a principal in our Wolf's Assurance Group and leads the firm's FinTech team. Please join me in welcoming Rich Fay to kick off today's event.
Great, thank you, Stephanie, and thank you everyone for joining. As Stephanie said, I am a principal in Wolf's audit department. I've been with Wolf for almost 15 years, working with financial institution and technology clients. For those of you who have been following FinTech, you've noticed that the sector has been transforming with more and more FinTech companies realizing the benefits of partnering with financial institutions. And that's one of the main reasons we brought everyone here today. We envision the Financial Services Leadership Series to be a premier thought leadership and networking resource for the financial services industry. And while networking might be prohibited a little bit at this point, we do anticipate that to be a major benefit going forward. So events will include FinTech, which is why we're here today, strategy, and any other innovative ideas that can be used for our client base as another way to add value to them by us. So with that being said, for today, we've gathered leaders from FinTech companies that know what it's like partnering with financial institutions. I'd like to go around the room. I'd like to go around the panel at this point and give everybody an opportunity to introduce themselves and their companies. Pete, you're on screen. Do you want to start us off?
Sure, happy to do that. So great to meet everyone. Nice to be part of this conversation. This conversation is kind of near and dear to my heart, and this is really special for me to be involved for various reasons. And some of that is personal. So I'm actually a former Wolf employee. I actually worked with Wolf from 2005 to I think 2007 with Jerry, Ryan, Matt, Mike, and the team. So I've actually been probably in many of your server rooms, maybe potentially even longer than you have. I always thought it was funny how you all would put us in the server room, maybe to encourage the audit to move a little bit more quickly. But I've met many of you before, so excited to be here and be meeting you all again. After that, after Wolf, I actually went and I was a mass banker for a while myself. So the community banking space, the New England banking space is near and dear to my heart. I led Radius Bank's technology strategy for about 5 years. Radius Bank was First Trade Union Bank, evolved into Radius. And as many of you may be aware, they were acquired by Lending Club in the last year. So now I'm a FinTech guy, really primarily because I like to wear jeans, a t-shirt, and a blazer. I'm always a walking billboard for my company. But really secondarily, and really the primary reason is because I believe that partnerships between banks, especially regional and community banks and FinTechs, are really the future. And together we can truly serve our mutual clients in a fashion that is better, competitive and better than big tech and the big banks. So that's a little bit about myself. Looking forward to the conversation today. Who is Sensible? Just quickly at a very high level. So Sensible is a Toronto-based FinTech. We have over 100 clients ranging in size from Chase all the way down to some of the smallest banks and credit unions in the US, and a little bit of everything in between. So what do? We deliver a receipt and invoice management experience to our bank's customers that helps them solve for various use cases. So we get deployed and deliver into either a SMB type line of business, commercial line of business, or potentially a consumer line of business as well. In the consumer world, we're helping those individuals with more of a PFM play. In the SMB world and commercial world, we are diving into really an expense management, invoice management type play. So more importantly, on the back end, we help our financial institutions understand their customers in a way that really they could not understand them before. And we do that through the SKU level data set that is present on receipts and on invoices. So we extract that data, we normalize that data, we combine it with the transaction data that you all have. And through the combination of those two things, we can help you more efficiently, accurately, and in a more timely manner recognize shifts in your users' behaviors and their lifestyles, various triggers, et cetera. So ultimately, what does all that do? Well, we help you deliver a more personalized experience to certain individuals, but potentially even more importantly, we help you deliver the correct banking and product solution to that individual at the right time. So we help you meet them where they are at their life and deliver the right banking product to help them get through whatever they need from a financial perspective. So that's a little bit about myself and the company. Really looking forward to the forum here today.
Great, thank you, Pete. Dan, you want to go next?
Happy to, yeah. I'll first introduce myself and then talk about Numerated a little bit. So I'm Dan O'Malley, CEO of Numerated. Prior to Numerated, I was the Chief Digital Officer at Eastern Bank and the founder of Eastern Labs, where we incubated the technology that became Numerated. Been a fintech guy for a while. Prior to Eastern, I founded a neobank, one of the first neobanks called Perk Street, and then was a Capital One guy before that. Started my career as a data scientist back before we even called it data science. We called it operations research back then, which means I'm basically a giant nerd, and I'm happy to talk data whenever you want. So that's my quick overview. I'll tell you about Numerated. We make originating business loans and deposit accounts incredibly easy. I'll give you a couple of key facts about us, and then I'll tell you about the platform. We work with 140 banks and credit unions across a range of sizes and business products. Nearly 400,000 businesses have used our platform to originate and then manage over $50 billion in loans and accounts. Company's about 4 years old, spun it out of Eastern Labs 4 years ago, and today we have a team of just over 100 people. So it's been a heck of a ride in our 4 years, and amazing to see our team grow and grow, and the impact that we can have grow and grow as we work with more and more customers. I'll give you the quick overview of how our platform works, but I'll make it brief. We help lenders digitize the origination process, taking an application, reviewing and approving the application for a product, and then taking an action on it, opening or closing an account. We use data to make that whole process easier and more modern. We're going to pre-fill applications to take work away from borrowers. We're going to highlight risks using data so that when you review and underwrite, you can do it faster. And we're going to automatically create document packages in the back end because nobody likes doc prep. And so the result is this incredible customer experience. It's so simple and easy that today, 84% of all of our applications are being done by businesses themselves, including large commercial borrowers. Truly a sea change in how technology can be used to make business banking simpler and easier for everybody. So that's how our platform works. I'll give you the sales pitch and pause there and hand it back to Rich to see who's next on the agenda.
Great. Well, I have Karen sitting next to me here. So Karen.
Hello, everybody. So great to be here. Such incredible companies and so great to be in this community. I love everything that Wolf has been doing over the past few years. And so great to be amongst all of you. I started as a commercial banker myself. So all the things that we've just been hearing about from the other two distinguished speakers, I got to experience firsthand as I tried to make it possible for business to get access to capital, their top 3 priority, which is get money so they can continue to run their business. And it was a dog's breakfast when I did it. And unfortunately, the task of getting that information is still difficult today. So Boss Insights is the second company that I am a founder of. The first one was also a financial play to give businesses access to capital to make them more energy efficient. This one is to make them more financially efficient. What we are doing is we're giving business lenders, so that's community banks, credit unions, private lenders, access to their customers' financial data in minutes. And we do it with a single connection to accounting data, commerce data, and also banking. And that allows them to connect in 2 to 3 minutes, a task that actually takes weeks if you try and do it. And that's just the first time, because a PDF of financial statements is exactly that, a snapshot in time. What we've shown with the community banks we've worked with is that we can increase the speed of deciding on a loan and monitoring that loan by 5 times. So we take that 80-20 rule and we reverse it. Back when I was a banker, most of the time was actually spent clearing off the desk so you could grow that relationship. And here you have all the information at your fingertips so that the rest of the loan processing happens smoothly. Really excited to be here chatting about what we've seen over 2020 and what's coming before us during 2021.
Thank you, Karen. And Greg?
Hi, good afternoon, everybody. I'm Greg Wolf. Pleasure to be here. Thanks for the invitation. So my background as well, I'm also a repeat entrepreneur. This is the 3rd fintech company that I founded. And Fiverity, so what's in a name? FI stands for financial industry, also fraud intelligence. And Verity stands for Veritas, which means truth, as everybody knows. So at Fiverity, we are an AI ML platform, machine learning platform for cyber fraud and threat intelligence. And as Karen alluded to, 2020 was a very interesting year for everybody. And the incidence of cyber fraud has really grown dramatically, especially in community banks and credit unions. And we take a different approach. What we do is, I think most people think AI and they immediately think, oh, it's this, what we like to call big data AI, which is, billions of data points at a Google or at a Facebook, which are used by, jammed into these very convoluted algorithms by only the data scientists who really understand it. And the goal of those type of solutions is really to quote unquote tell you what you don't already know. So for instance, what's my next stock trade, or what's my next recommendation for a shopping cart? So we don't do that. We focus very much on the risk and compliance and fraud area, particularly in cyber fraud. And we take an approach that we call scaling the analyst, where we basically have humans in the loop, right? Because you folks have fantastic teams of fraud analysts and investigators with CFE qualifications, and they really know what they're doing. So we leverage their know-how and allow them to scale their know-how by allowing a human in the loop algorithm that allows the system to learn and adapt to the patterns of the fraudsters as the fraudsters change. And we found this to be tremendously effective since going live into production at the beginning of last year. We've been able to save our customers around 40 to 50% of the fraud that we're identifying is actually slipping through the cracks using their traditional systems, mostly because the world has changed, and between staff and customers and members going online, it's a whole different profile to catching these type of fraudsters, and the fraudsters themselves obviously are taking huge advantage of it. So looking forward to telling you more about us and how our solution works.
Great, I appreciate everyone giving their background. At this point, we're going to launch the first poll to try to gauge an understanding as to how the room feels about embracing financial technology at this point. So Stephanie, can you launch that? And we'll probably just give that another 30 seconds or so. Stephanie, whenever it looks like everyone's done responding, if you can post the results.
No problem. Probably about 10 more seconds and we'll be good.
Perfect. All right, great. So it looks like the majority of people are looking to adopt more technology, including outside the core. So that's a great start. Now, my guess is if you joined a FinTech forum panel, we might have the more FinTech advanced people actually joining this group. The ones that don't want it probably didn't join in the first place. But at least if you're here, you're interested in what there is further to do with FinTech. So I think a big part of finding new FinTech companies to work with is knowing how they actually get their starts. And there are some different backgrounds in the room that I think everyone will find interesting. So Karen and Greg both went through an accelerator path. They were members of accelerators and who helped them sort of launch their business. So Karen, do you mind sharing what that was like, and then Greg chime in as well?
Yeah, absolutely. We were really fortunate to be part of Mass Challenges and DCU, Digital Federal Credit Union's innovation group. And what's incredible about that is they get you the ability to interface with decision makers really early, way before you're ready to even take a product to market. And you can just ask questions. The thing that fintechs, when they're going to market, might forget is that banks have a lot of options in front of them. So the last thing they want is somebody to just talk at them with their product and solution. What they really want is somebody to ask questions and find out what they need, and then see what they've built, whether it actually meets those needs. So that was, to have the access to multiple banks so early on and credit unions at the same time was really, really helpful for us. And I really have only good things to say. With Mass Challenge, we were able to secure 2 letters of intent in under a week. That is just not something that an early stage fintech would have been able to do at that time. And with DCU, it was constant meetings, constant looking into how we present ourselves, how we approach the buying process, how we make sure that we're addressing the needs of the banks themselves. Because we just saw in the poll that there's a big focus on innovation at the moment, but innovation and digitization, these are very high level words. What is required in order to get a relationship to happen is to identify the actual need and make sure it's something that's required in the next 1 to 2 quarters.
Great. Greg, anything to add?
Yeah, definitely. So once again, we're kind of following closely in Karen's footsteps here. So we actually also started out at the DCU FinTech Innovation Center, which was a tremendous forum for us to bring a group of technologists. And our team has expertise from Stanford, MIT, Harvard, and really kind of bring it to bear with interaction with an organization of the size of DCU. And we learned a lot, and we're very grateful to them for helping us get to this point. We subsequently went through the Mass Challenge FinTech program as well. And like Karen had some interesting relationships and validation that came out of that. And then after that, we actually went through a neat program called CDL, Creative Destruction Lab, which is actually an organization run out of Canada, but they have 10 different kind of cities, 3 of them in the US, which promotes kind of innovation. So I think overall, there's a theme here, and that is that financial institutions, banks and credit unions are looking to innovate and have come to the conclusion that partnerships with folks like us are the most effective way to go. And finding the right forum, I think, is really critical for us as startups. As Karen mentioned, obviously, it's a great opportunity to connect with folks like you. But I think for folks on the enterprise side of things, it provides a unique opportunity to kind of test the waters, get a sense of what type of technology is out there, learn from your peers as well in terms of what are best practices, successes and challenges that folks have had in partnering with companies like us. And then I think most importantly, there's this congruency in the middle whereby the startups learn to become enterprise ready. And that's a really big challenge for us as a startup, and a real big kind of a milestone that you folks want to see in place. So I think that to me was the biggest takeaway from the various incubators and accelerators we went through, and that is the ability to kind of get us closer in terms of understanding what your needs are and how we can respond to that, so we can become part of an RFP process with the SOC 2s and all the other pieces that we needed in place to actually bring a solution together to market.
Thank you both. Dan, you had a different background, and some of the banks on the line here might actually be interested in creating technology themselves from in-house. So can you explain some of the benefits from being started within Eastern Labs?
Yeah, we admittedly took maybe the extreme approach for trying to accelerate our usage of fintech at Eastern. I worked with senior management and the board to bring a team of entrepreneurs inside of the bank, the 7th oldest bank in the United States, to actually build tech. And it was crazy. And it was a hell of a 3 years while we were all part of the same organization. But it was transformative. And in the technology we created that became Numerated, but also just for the culture of the bank, truly a different place today. I don't think Eastern could be executing like they are now as a public company without the shot in the arm of like, we're just going to innovate and figure it out no matter what. And so I recognize that is not the right approach for everybody. And I tell that story, and some of you may know the story of Labs, just to say that it's possible. Like, if you do feel the need to get aggressive and do things in-house and change the culture, again, Eastern was the 7th oldest bank in the US at the time, and a mutual. It does not get more conservative than that. And we did it. And so definitely helpful for both us now as Numerated and the bank too.
So there's constant news about the amount of money being invested in financial technology companies, including financial technology companies acquiring bank charters. How can traditional community financial institutions compete with these new external pressures? And Karen, why don't you get us going?
That's so funny, because I was going to say Pete should get us going on that question, given his...
If you want to defer to Pete, that works too.
Well, not once I have the mic. Pete, please, why don't you start with Radius, and then I would love to follow on with the story that we were talking as we prepared for this panel about how Radius came up on a panel I was on in early 2020, but it's Pete lived it, so.
Karen, that's too kind of you. I'll toss one back at you a little bit later in the panel. But yeah, thanks. I've got a couple thoughts on this, and I think maybe before diving into it, just kind of as I mentioned in my introduction, I'm a big believer in the community FI space. I'm sure everyone on this call is. I think we all also believe that access to capital is the bedrock of our economy, bedrock of our society. And the community FIs do that, I think, in a logical and localized manner that the big banks cannot do, that big tech cannot do. So community FIs, I really truly believe are a big part of, they must be a big part of our economy moving forward, and we all must find a way to make them successful. And we're all, I think, on the same page on that. And so, but I think it's also worth saying that, or reminding ourselves that there are some fintechs that may not look at it that way. I guarantee you all the panelists here look at it that way, but there's some fintechs that may not. A lot of fintechs and big techers and even big bankers, look at community banks or look at banking as a whole, and they think, gosh, they have no idea what they're doing. They have no clue what they're doing. And I do not think that's the case at all. I don't think any of us think that's the case. Bankers are really, really good at banking. You're incredible at banking. You understand your local communities. You're great at customer service. You're great at compliance. The list goes on and on and on and on, right? You're very, very good at those things. So some of the things you may struggle with are a bit more tech related, right? And rightfully so, especially some of the smaller institutions. You may lack the budget to have data scientists or engineers or product or UX people on your staff. And that makes sense, right? And that's where I think partnerships come in. And Karen mentioned Radius, and that's kind of the conclusion we came to at Radius, is that the combination of really good bankers and really good fintech technologists is how, when those two come together and synergize, sorry to use that term, fintech guy talking about synergies, but when those two come together, that's really how you succeed. It's funny, as I think about my past at Radius and then moving over into fintech, at Radius, I was the most technical person. I was the technical guy. And then I move over into fintech, and suddenly I'm like the least technical person in the fintech. I'm the business guy, right? And so, we as fintechs, we are made up of engineers, UX, product, data scientists, machine learning people, all that type of stuff. So it's that combined partnership where we bring both of our skill sets to the table, where I think we truly have an offering that is more compelling, more localized, and better than what big tech and big banking can do. And so one other thing, that's the conclusion we kind of came to at Radius, and there's more around that I'm sure we'll talk about, but Radius took that was their strategy. They partnered with fintechs, and they were able to go out there and they were able to beat the big banks at what the big banks were good at, and they were able to beat big tech at what big tech was good at, because that was their strategy, right? Bringing two parties together and combining those skill sets. So I think another thing that's worth kind of sharing here, and then Karen, I'll toss it back over to you, and this came up last week when we were prepping for this session, is that, I think all too often smaller financial institutions say, what am I supposed to do? How am I supposed to compete with Chase? How am I supposed to compete with Apple? How am I supposed to compete with Google? Look at my budget, look at the resources I have access to. What the heck am I supposed to do? And I'm sure not all of you say it that way. Maybe some of you do. But I would encourage all of you to look at your size not as a blocker, but as an opportunity. You are more nimble than Chase. You're more nimble than Google. You're more nimble than Apple, right? You have the ability to be more nimble. So you can outmaneuver all of them at their game due to your size. As an asset, that is not a hindrance for you. So anyways, those are just some thoughts. Karen, maybe I'll throw it back over to you.
Sure. So last March, the last panel that I was at in person was with Bank Innovation. It was about fintech and banking partnerships. And I was shocked that the panel became fintechs are going to buy us and take us over. And Pete, to your point, there are fintechs who are doing lending, but there are fintechs who are just offering technology, very specific technology solves to specific challenges. So then it's just an issue of matching the need that a community bank has to the fintech who is solving that challenge and figuring out how to get those KPIs happening really quickly. So the whole room was just a room of fear. And I said, look, I know it's happened once in history, and I know things are going a little wonky, but Boss Insights is not about to go purchase any banks. And I got a laugh. I said, I think what everybody's actually fearful of are the very large fintechs who are doing lending, and also the big tech like Amazon. And then we could have a discussion. Once that was sort of set aside, we could have a discussion on how to partner. What we're doing is really simply just grabbing business data. That means that the rest of it, the operating under regulation, the credit decisioning, the building the relationships, the C, the character, one of those 5 C's to approve the loans, all of that is still something that is required by the bank. And knowing that and being able to have a way to instantly make things faster, but still operate with that level of professionalism, with that level of regulation, that's something that the rest of the industry can't do. And that's what we showed going forward. PPP often, that was the big new style of lending in 2020. And I think some people hear it and what they're feeling is PTSD from those 2 or 3 a.m. mornings that they were working until in order to get things done. CEOs of banks calling businesses to say, just get your documents in, that sort of thing. But it was also a huge opportunity for community banks. And one of the banks that we were fortunate enough to work with, CC Bank, they said they generated 1 to 2 years worth of leads, 2 to 3 years worth of leads in 1 to 2 months. So that's the agility I think that Pete was talking about, where a fintech could never achieve that on their own. What they can do is support the bank in their efforts, and then those results can be achieved. That's the thing that we learned over the past year. And I'd love to hear in the comments if that's what banks are feeling right now at the community level.
And are there other ways to use the community financial institutions' existing strengths? Like Pete, you pointed to the fact that they were smaller and more nimble. And what about the fact that they are in the communities that they serve and they have that more personal touch? What are the ways that they can kind of implement technology and utilize those existing strengths? Dan, you want to start us there?
Yeah, I mean, I think the advantage that community FIs have is service, right? It's a service business. And so not every part of banking, not every product in banking is a product where service matters more than scale. And so there's some products where it doesn't really make sense to compete because you're competing with institutions that are 1,000 times your size, right? Or Amazon. But that's, I would say, maybe 3-4 products inside of a bank. And then the rest of the bank is competing on service. And so the question is not really how you're going to compete with fintechs. The question is how you can use fintech to provide better service for your customers. And there's like a million ways to do that now. It's super exciting. The ability to remove friction from your customers, remove friction inside of the bank, provide a better experience, right? Is awesome. There's like 100 different ways you can invest in that. And I think figuring out as an institution, like where you do want to put your chips is probably the biggest question you've got right now. Where do we need to make our service better? That's going to depend on whether you're talking about commercial real estate loans or trust services, right? And which is bigger and more important for your bank? That just depends on your strategy. So I really don't think there's a ton of competition going on with fintechs for most products that the people on this call really care about. I think the question is, how do you use fintech to better compete the other players in your
market? That's a great point. And so what are some of the areas where community financial institutions should be looking to implement fintech, even if they haven't necessarily done a lot of that in the past? Greg, do you want to get us going there?
Yeah, definitely. One of the things that's interesting, because obviously community banks are always competing against the big banks, right? And what we found was that there's a tremendous willingness for community banks to actually share intelligence around cyber fraud and fraudsters. For the most part, they're being attacked by the same hackers and the same challenges, especially with things like synthetic identity fraud, where you have these fake people, hackers are creating these fake identities for the purpose of opening up loans, credit cards, auto loans with community banks, where they're leveraging the kind of the smaller footprint. So what we've actually found is that there's a tremendous willingness for community banks to help each other out. The challenge, of course, is data privacy, right? So how do they share information around risks without convening any kind of GLBA or other types of regulations? So what we've actually done is we've moved our platform from a standalone basis to a cloud-based platform, whereby we enable community banks and credit unions to share intelligence around cyber fraudsters without disclosing any PII. And I think as we build out that net, that actually becomes hugely valuable to the industry because, as we know, fraudsters are continuously changing their MOs. And leveraging the community, the willingness in a community to participate with peers, right? Basically formalizing the network where a fraud analyst at one bank would pick up the phone and call their friend that they met at an ACAMS conference last week and say, hey, watch out for that fraud ring. Look out for these types of patterns or these sequences, etc. We've actually institutionalized that, and we've found a massive adoption of this concept because it's enabling in a very secure data privacy fashion community banks to actually collaborate around fraud detection, which I think is one of the biggest challenges facing them. As particularly, and I think we can dial back this conversation at the beginning, the majority of community innovation, banking innovation is around digital transformation, right? We're all, co-panelists agree, digital transformation is here, right? And this is one of the biggest things that we're all looking at from different angles. And of course, the Achilles heel of digital transformation is fraud. So we found that there's a willingness in the community fashion to share intelligence around fraud, and that's proving to be hugely valuable from an ROI perspective.
And Karen, you brought up an interesting term the other day. It was called customer friction. Can you elaborate on what customer friction is?
Yeah, absolutely. So a lot of times when we're speaking with banks, it's not that there's a lack of willingness to make things cost less money to operate and serve their business client better. It's more that they're concerned that customers have always been doing it one way, and will they want to do it? Will they want to change the way they're doing things? So it actually brings up another point, and I'll answer both at the same time, that I wanted to make sure to address. A lot of times what we're hearing from banks is, what area should we be focusing on? And we always look to ask them, well, what's the most manual of efforts? What's the biggest pain points? The reason you're seeing so many fintechs focusing on payments and on SMB is because those are two huge areas of customer friction. One, because payments are very manual. I say this as a small business owner myself, and as somebody selling to banks, incredibly manual. And SMB, for better or for worse, it has less deposits and less loan amounts than commercial. And so they are not given the same level of service. What we have to show when we're working with community banks is that there is something that you are giving to the customers that make them want to switch over to a new type of technology. There's no question in anyone's mind that everybody expects the consumer experience, right? Something that is hyper-personalized, something that is really easy to use. There's tons of LinkedIn posts out there saying, how many clicks does it take to open a banking account? How many clicks does it take to apply for credit? And the easier you have it, the easier the experience is for your customer, the more likely you will be to engage them. If you continue to ask them to constantly give you information whenever you need it, as opposed to just asking them for consent for it, they will experience a much more difficult user interface. They will go to where it is easier. That's just the way the industry will flow. So that's the thing that we have had to show people, that you don't have to ask them to gather their information, to attach it to you, to send it to you, to get it into your core systems. You can literally ask them to take the 10 seconds that it will take them to give you authorization. And they will do it because you're giving a secure platform, because you're giving them a better outcome, whether it's on deposits or it's on lending or whatnot. They will be pleased to do that. They're already sharing information, but you're reducing the friction by making it easier for them to do so.
When we were talking earlier, we had the idea came up that by selling additional products to existing customers, you were able to enhance your relationship with them, and then potentially keep them around for longer than normal. So Pete, can you explain how you would assist in going about that?
Yeah, yeah, absolutely. And I think this speaks to, maybe even a larger question, which is more around, how do we as fintechs help you, the bankers, move the KPIs that are important to you, right? And we all know that in the retail world, we are always talking about us being the primary operating account, or growing our share of wallet, right? And so I think these are very important topics that, as you're engaging out in the market, and you know what your KPIs are, you know what you need to move on your side of the house, make sure they align with the partners that you're working with, right? And if they don't align with the partners that you're working with, challenge them on that, or think hard about working with those partners, right? So if you are having a conversation with myself or anyone on this call, or one of the other hundreds of fintechs that are out there, and they can't really verbalize to you in your language how they help move your business, challenge them on that. That's an opportunity where you should really press pause, because they should understand your business enough to be able to help you with that, if they're really going to be true partners. Otherwise, they're just going to be a vendor. And so, I think for us, so specifically, back to the question, for us, really our ROI is really twofold that we talk with our financial institutions about. And there's really kind of two buckets that we throw that into. And one of them is an engagement bucket, and one of them is a share of wallet bucket. And the engagement bucket, we really, and this isn't unique to us, a lot of fintechs do this, or say they do this, and are trying to help with this. But in the engagement world, there's a retention and engagement play here. And so specifically with us, one of the things that we've been able to find as we've done case studies with our customers kind of across the spectrum is that receipt users, so that's digital bankers who are leveraging our receipt technology within a digital banking experience, are 4 times or log in 4 times as often as non-receipt users. That's important, right? Those are opportunities for you to engage with your customer from a digital perspective. We all know that. Additionally, some of the things that we specifically try to dive into, because we know they are important to you all, is that we found receipt users are 2 times less likely to churn, right? Retention, attrition, incredibly important. And 2 times more likely to actually have your account be their primary operating account, right? So we always have talked about in banking the classical sticky products, that's direct deposit. We thought bill pay was one for a while, P2P, potentially some other ones, but we found in our case studies with our clients that receipts, the ability to engage with a receipt management experience, is one of them as well. And those are some of the things we do on the engagement side of the house. And that's not me saying, hey, we're great, all that stuff, but I'm really just trying to stress that your partners need to be speaking the same language as you, and moving the KPIs, speaking the same ROI that you speak. And so then back to the other question at hand, share of wallet, how do we help with that? And I kind of talked a little bit about what we do in my introduction, but ultimately the real revenue driver that we help with, all that engagement stuff is nice. We call that stuff a soft ROI, because it's hard to really quantify that sometimes and bring that down to the bottom line. But we all know that, selling an additional product or adding an additional product, you probably have done all the math. You know exactly what that means to your bottom line every single year. And so with our receipt users, what we found kind of across our spectrum of customers is that their receipt users are 2 times more likely to purchase an additional product than non-receipt users, right? And that's just the start of what we're trying to work with, but we do that through the power of data. I know we're going to get into the topics of monetization of data in a little bit, and I'd love to talk about it a little bit more then. But essentially, that is one of the ROI drivers that is probably most meaningful for all of you. So you should really challenge your fintech partners as you're engaging with them in the sales process or after the sales process. How are you helping me move my bottom line? And if they can't really answer that, or they really pause at that, have a good conversation with them, challenge them on it.
If the audience is going to get buy-in from their stakeholders, including their board, they'll probably need to point to some performance numbers in order to say, oh, in order for them to get the blessing to move forward. So what are some of the key performance indicators, KPIs, that they would be able to point to if working with your company? And Dan, do you mind kicking us off?
Sorry, I was talking on mute there for a second. Yeah, I mean, I think the challenge for at least the next 12 or maybe 24 months is going to be, how you make a return in the current rate environment. It's tough. And so I feel like all conversations either start with, hey, how do I drive efficiency and get my efficiency ratio lower than I ever thought it could be before? Or how do I just find some more spread? And so, as we've been talking to our customers, I think efficiency is probably going to be the big push. But I also think, honestly, for the first time since like 2008, we see banks opening up to more risk and saying, if we can manage it right, if we can get some data around it, we'll go take a little more risk than, we would have been open to, 5 years ago. And I think the regulatory environment is changing to support that. We'll see how the current administration handles it. But I think fintechs help with both. I think if you want exposure to a new asset class that you weren't in before, you can find that by partnering with the fintech who's got technology to help you enter that class. And then I think if you're just looking to squeeze more and more efficiency out, there's lots of providers that are obviously focused on helping drive that. And I don't just mean the big core providers. I'm sure everybody on this call is good at trying to squeeze them every year to pay a little bit less. There's plenty of companies like the ones on this call who will help you, squeeze out cost and, do more loans or more accounts or more monitoring, with less resources every year.
At this point, we are going to kick off our second poll of the day. And so, Stephanie, will you launch that, please?
Can we cheat, Richard, and answer the questions the way we want to answer the question? Is that allowed?
You can cheat. I think I might have answered the first poll as well.
Rich, we're about halfway there, so I'll give another few seconds for people to submit their responses.
Perfect. And once we wrap up this poll, we'll dive into monetizing data, which could be a conversation all on its own, and it can probably run a lot longer than the allotted time that we have. But we will try to hit on some of the high points and tell you what you should expect. Great. So we have a nice variety of responses here.
What's interesting is that all these areas are tied together in a certain way. It's what's required to create a full service relationship. So what seems to be happening, and I'm getting sometimes from banks as we're having these discussions, is great, you're solving this piece, but we actually need these other 3 pieces solved too. Who can you bring to the table so that we don't have to go and do that work and bring it all at once, so we don't have to do the security review on 3 different companies at the same time? I don't know if the other panelists are hearing that.
And we did have a question come in from the audience. In general, we're trying to embrace technology. However, culturally, one of our biggest concerns is information security and assessing risk. Will there be a discussion topic about it? I'd say we can probably dive right into it right now. So probably two different parts. Culturally, Dan, you embraced cultural early on with Eastern, right? You said it basically transformed it. You want to take this part?
Yeah. That stuff is hard. I actually once got told that I was unethical because I wanted to make it easier to borrow money from the bank. True. And I was like, guys, I'm just like trying to save our customers time. You literally just called me unethical because I wanted to help. Like, so I think the biggest challenge in thinking through like the InfoSec problems is probably not your regulator. Would be my honest to God assessment. It's probably internal culture. And it takes work to like onboard a fintech. Everybody's really busy, and you're trying to drive your efficiency ratio down. So there's not a lot of spare capacity. You're asking somebody to work that night and the next night and the night after for a while to onboard a fintech. That's what it takes. You got to go beyond what you're doing today. And I think you just got to like clear some space for your team to do it, to make it happen, or else it won't. And so I think regulators are increasingly understanding of the need, not just the opportunity, but the need to be working with agile partners. It's not going to come from the cores, and so you got to do it. You just got to find the capacity on your team to make it happen. Just my perspective, though.
And the banks have had these policies and procedures in place for years, and it's a result of being regulated as they are, and they also have reputational risk. And how can those existing policies and procedures either foster or inhibit innovation?
Maybe I could jump in here, and I'm not sure I have an answer to that. In fact, I'm sure I do not have an answer to that. But I want to piggyback on what Dan said there, because that is real. That is absolutely real. And I think that too often the default posture of InfoSec and compliance is no, we cannot do that. We are a bank. And I think over the last decade, good banks have coached that organization up, or maybe even made some changes within that organization, and those people have changed their mindset to some extent. But I think that's still a real challenge at a lot of financial institutions. And I believe that a financial institution that has that no, we cannot do that, we are a bank, as their default posture, is in for a rough ride over the next 5 to 10 years. I think across the financial institution, but especially in the business units that can say no to something, as in compliance, InfoSec, audit, etc., the default posture should be interesting. I have some concerns, but let's explore that together and see how we can do this while protecting the financial institution. And I think that's just got to be how they approach everything. And I actually personally went through a transition like this in my early banking careers, coming out of my time in IT audit. And that was a transition for me. And when I got myself to the point of interesting, let's figure out how we partner to do this, it was much healthier for the financial institution. It really should be an internal partnership there between the innovation team and InfoSec, compliance, audit, regulatory.
I was going to say that there are things that the fintech can do to help the banks out, and there are things that the banks can do to make sure they're ready for it. And this all comes, again, not to bring up a conversation from the past, from a DCU preparation session. So I have to give them the credit of giving us this question to ask. Do you have a separate vendor due diligence process for fintechs than for regular vendors? Asking that simple question will give you how difficult it will be to go through the security review. But a fintech can come prepared with a SOC 2 level 2 completed, which makes it a lot easier for banks to open up their doors. And if they don't have that, they can have a vendor security questionnaire already created, ready to go and send out to banks so they can review it. For ourselves, there is no getting adopted when you're dealing with data without going through a security review. And we have never been declined on a security review. There have been 1 or 2 financial institutions that said they're much more comfortable with a third-party audited review, but even so, they were willing to accept the vendor due diligence. So that, just having that conversation and having it upfront as soon as you've agreed on the scope of the project or the pilot or whatever it is that you're going to be working forward on together, that really helps things get streamlined. And the other thing is I see a divide with community banks. Some of them will have the business unit leaders asking for things in market, and then the technology groups reviewing it. And other banks will have the technology groups giving their blessing before the business leaders can say okay to something. And there really isn't a right or wrong, but if you do have information coming in from the market, chances are you'll get the latest needs. Then you can apply a security lens to it rather than the other way around.
And Greg, this seems like it would be an interesting topic for you because your technology product helps to identify risk and mitigate it, but at the same time, you do need that access to client data. So how do you navigate security concerns around your product?
Yeah, that's a good point, Rich. Thanks. So a couple of things. Firstly, um, we were fortunate to get a grant from the state to use some technology that was actually invented at one of the local universities here that the state had been sponsoring, here being Boston, for people who are not in, right here. And using this technology, we're actually able to obfuscate PII information. And I think that's been really critical in terms of getting data from banks and credit unions, and then obscuring it in a way so that our algorithms can actually, do their job and look for fraud. So we've actually found that to be rather an enabler in terms of being able to work with our current customers. On the other side, I'd just like to talk about the regulators for a second, because what we've also found is that when we started the company, we actually started a think tank here called the Boston AI Think Tank. And the goal of the think tank was to engage senior folks in the risk and compliance role in financial institutions, as well as regulators. And we've actually built this out to a group of about 20 different participants at very senior level, from credit unions to banks to asset managers. But we also have the Federal Reserve and the NCUA and the OCC who've participated in some of our meetings. And what's interesting is we found there's a huge initiative at every government agency at a federal and at a local level. We were interviewed by the Mass DOB Division of Banks late last year as well. But there's an initiative at a regulatory level to engage and understand innovation and technology. And instead of kind of running away from it, I find that the regulators are embracing it and saying, wait a minute, we recognize this is here to stay, and we'd rather control it and understand it and put in the proper supervision and policies and procedures to have this operate. So we've been very fortunate. In fact, when we look at our community sharing model of sharing cyber fraud and threat intelligence, especially around synthetic identity fraud, which is a big topic for the Fed. The Fed invited me to participate in a task force, a national task force, to come up with a definition for synthetic identity fraud. And we're going to be publishing something soon about that. And we have MasterCard and TransUnion, some of the big players on there. But I think look overall that there's an extreme willingness for government agencies to get involved and kind of work together in figuring out how we can do this kind of fintech innovation in a safe and secure manner more efficiently across the industry. And they're even participating in our community initiative. So I think it's very promising as long as the risk is managed appropriately and new technology allows us to do that.
And Rich, sorry, I know I already spoke on this topic, but I just wanted to jump in on that because Greg is absolutely right there. And I just wanted to share something in my experience because it might be fairly tangible for the group. But when I was at Radius Bank, one of the things we did is we created a partnership with a local Boston company called Level Up. And we actually rolled out the first bank-branded mobile payment application in the United States. Little tiny First Trade Union Bank at the time did that. And we did that, and we were having conversations with our auditors, with our internal compliance team, and everyone wasn't quite sure what to do with it because we didn't know where it fell within the spectrum of how we assess risk, how we look at it, how we appropriately manage the vendor risk and the IT risk associated with this. And so we actually made the decision to proactively reach out to the OCC and bring them in and have a conversation with them prior to moving forward with that partnership. And I can tell you when we proactively reached out to the OCC, the person who came in, he didn't understand what we were talking about, but my goodness, he appreciated the partnership mentality that we had in trying to be proactive with him and saying, we want to do this. We want the blessing of you, our regulator. We think we have everything covered here, but we want to show this up to you, right? And if we hadn't done that, they probably would have figured out we did it, who knows, 9 months, 12 months, 18 months down the road, not understood what we were doing, and immediately had, once again, that knee-jerk reaction of no, no, no. But instead, we were proactive in that. And we got their blessing, right? And actually, I think helped evolve their practices to better understand, some mobile payment technologies as well. So, once again, I think a theme that we're all talking about here is open communication and partnership between all these different moving parties to make sure that you've got a common goal that you're working towards and everyone's bought in on it.
I would say that a lot of the news about the regulators has been that they have a focus on innovation. So what do you say to the community financial institutions that have been around over 100 years? They've done just fine doing it the way they are, and they don't have any intentions on changing going forward. Say, we used to do it this way. It's what got us here. We have no reason to change. What would you say to that group? Dan, you want to get us going there?
I gotta jump on this one, and I'd say I think COVID has changed everything. I think that perspective is few and far between at this point. And last year everybody was dealing with day zero problems, which is how do we get our team remote? How do we keep things secure? How do we keep our lights on? But this year, I think digital transformation is just so aggressively being adopted by the industry to keep, especially community banks and credit unions, to keep folks, businesses relevant. So I would just say that I think that attitude of the same old, we're not hearing that. We're hearing the things swing the other way, and move more towards how quickly can we adopt innovation to survive. And there's a bunch of folks that have written some excellent books. In fact, I'll give a plug. One of our new advisors, we actually just closed the fundraise. So pick up the news today. You'll see some news from us. And one of our new advisors was a gentleman who ran the credit union division of Fiserv by the name of Mark Sebright, and he recently published a book on digital life around digital transformation, digital innovation. So I think there's a lot of activity in the space. Another advisor, HBS professor, also published a book on this similar topic. So I just had to jump in there and say we're not hearing that, and we're actually trying to enable folks and help them with the transformation.
Yeah, I think the only response is, hey, 2020, like the whole world just changed. I've been working on digitization and commercial lending for almost 10 years. And, right now, I think I mentioned before, 84% of all of our commercial loans right now are being done self-service by businesses themselves, including like really big businesses. Like it was 10% a year ago, 10%. Like the world just changed, customers just changed, the market just changed. There's like no option to not change with the market. Community banking is a service business. Definition of service just changed. And so like your organization can choose not to change, but then you're not competitive anymore. And so I don't think some things can be put off anymore.
I feel like I'm just going to be a cheerleader for Dan and Greg now, but CB Insights released a report last year about banks and their market share. And for 9 years, they were losing about 1% market share, which is something that it doesn't become a top 3 priority. But in 2020, they lost 9% market share to alternative ways of getting capital. And I think a couple years like that, and people start to take notice. So it really, but it can be overwhelming. And I think that's where fintechs and banks have to come together, because there are a lot of things that banks will do, like offer full service relationships, that even the alternative lenders, even if they offer easier access to capital, they can't offer a full service relationship. That's where the real partnership opportunity comes into play. We certainly don't want an industry where the people who are regulated and trying to do right by their clients, and the people who were the stars of COVID funding, which were the community banks, are feeling that they have to adopt. It's more, what is the road you would like to take to be most competitive going forward? And then there are people here to make it so that you don't have to build it. You can just purchase it in a way that delivers you greater revenue.
A lot of your solutions are based on data, and there's been a lot from the ABA and other thought leadership around accessing your data from the core. What are some of the challenges that financial institution can expect to come up as they're trying to get access to their data so they can implement a new financial technology? Karen, do you want to continue there?
Yeah, I was on another panel. I wasn't on it. I was listening to it, and it was the question about data. Why don't the existing banks who have all the data in the world, since data is the new oil, right? That's what's been thrown at us for 4 or 5 years now. Data is the new oil. Why don't we take that oil and just crush all the neobanks? And the answer from the incumbents were, we can't even get access to this information and use it properly. So we have it, but it's kind of like saying if you go to IKEA and you purchase a bed, you have a bed you can sleep in. You don't. What you have is the pieces of a bed that you have to build. And that's the status of data and the access to it in the core. It's getting better, but it is by no means solved. And then data and digitization, these are all big words and they can mean a lot of things. The information we're providing is not information that is available in the core. It's information that people have to go and chase. And the reason I know this is because the people who are my contemporaries when I was a commercial banker who are now VPs of the department, if I ask them, how do you build the relationships with your SMB and commercial customers? They're giving me the same answer 11 years later as they were when we were all doing banking together, which is they go into the banking statements and they see if their customers are using other products. And in a reactionary effort, they go and say, but our product is way better. And I said, but wouldn't you want to know that in advance? Wouldn't you want to know if the accounts receivable days were growing in advance so you could offer them an operating line bump? Or wouldn't you want to know if deposits were coming in advance? They said, yeah, we can do that. So data in the core, very difficult to access and give to the people who need it, who can then give it as a product to the customers. We're still in a place where the customers are expected to come to banks and know exactly what product they want. And that's just not a customer-centric approach. And then the information that a lot of data aggregators are offering is information that isn't even available in the core. So the question is this something that you would want access to? If somebody said to you, you give me 1 hour and you could get access to it, would you want it? That's the question that the banks have to answer. Do they want to make this the priority?
Now, what about somebody who's sort of venturing out into accessing their data or entering into a partnership with a financial technology company, but they're not sure if they have the required in-house expertise necessary to do it? What types of in-house expertise would you look for when determining if you can engage with a bank as a partner? Dan, do you mind taking that?
Yeah, I mean, I think I probably have 2 reactions to that. One, somebody who can probably take a product mindset and understand like where to invest and try to get value and like what are you really trying to drive with the data and with a partnership around it. Your needs as an institution are just going to be different depending on what your strategy is, right? And so somebody who can take a product focus and be like, customers, this is how I can improve my customers' lives. This is what the market wants. Like you need somebody figuring that out, or else you're going to end up wasting a bunch of time. And so I'd say first and foremost, do you have somebody who's smart, market facing, and can evaluate solutions? And then second, and this is, maybe something totally different. So maybe this is 2 people, once a solution is identified, especially if it involves data, it's going to have to get shepherded through a whole bunch of different groups in the bank to get people to say yes. And there's just an element of like hardcore project management to get that done and consensus building. And, every institution's got kind of a few people who can take something from the very beginning to the very end. And so some of their time has to get put on this along with the kind of the product person who can help bring it through. Maybe that's the same person, maybe it's somebody else. And so I'd say those are kind of the 2 roles to think about when evaluating data tech.
And Pete, your product is unique in that the sense that you're already integrated with a core, so it could be an add-on product. Do you mind explaining how that's beneficial for you?
Yeah, sure. And by the way, Karen, I think we could have a whole separate panel on the challenges of putting together IKEA furniture. I think all of us know that all too well. But I love the analogy and great thoughts, Dan and Karen, on this topic. So specifically with us in this world, we recognize, so we have a strategy to be able to deliver, implement, and make successful any financial institution in the United States that wants to work with us. Tier 1 FIs have the ability to engage with us in a very different manner. They consume our technology. They've got their own proprietary digital stack. They plug it in. They've got all the engineers to do all that stuff. Great, right? They can engage with us that way. But the majority of the 12,000 financial institutions in the US, or whatever the number is now, can't, right? And so we have recognized that. And so one of the things we've done from a business perspective is gone out to the big providers, the big core providers, the big digital providers, and created reseller relationships with them. And so specifically right now, we have relationships with FIS, NCR, and Q2, where if you all have that as your digital stack, as your core stack, but really primarily your digital stack, you have the ability actually to consume our technology, which is essentially a module which is turned on without any sort of implementation effort on your end, because they have one-to-many SaaS deliveries, right? And so I think that we're not the only fintech approaching things that way, and there's a lot of others that do, especially fintechs that focus on the consumer experience. But so that's one element of it. But I think a couple other things I'd like to add to this broader topic of banks being able to access their data, or banks being able to work with what fintechs they want to, which is essentially integrating into their technical stack to be able to access their data. Because it's a challenge, it's a real challenge. It's something we faced during my time at Radius Bank, and we essentially came to the conclusion that we didn't have the ability to access our data in the manner that we wanted, and we didn't have the ability to build the technology stack, the consumer-facing tech stack on top of our core that we wanted. And so the conclusion we came to is we didn't have control of our digital strategy. And our digital strategy was far more important than just digital. It was essentially our customer strategy, right? That was a tough conclusion for us to come to. And so we went through a series of changes and a series of relationships and a series of partnerships to enable better control of our digital strategy, because that was really the primary touch point. And I would encourage all of you to ask yourselves that too. And I'm not saying the cores are bad. I'm not. They're great partners of ours, and I think they've got their place. But for the first time in history, especially community banking history, I think that you all have more options than just picking up the phone and calling your Sam and when you want a new product, right? You have dozens, if not hundreds of options, which may actually introduce a completely separate problem for you, right? To be able to filter through those dozens, if not hundreds of options, but there's ways that people can help you with that. And additionally, I think there are companies out there that are purposefully built to solve this problem. You think of, and these are middleware type companies. You think of a company like a MuleSoft, right? They are purposefully built to disintermediate you from your core, right? Which is essentially a good thing for you, may not be a great thing for the core. That's a fairly technical solution. But other companies like Move that recently came onto the market, and a handful of others, they have recognized this as a problem. They're going to capitalize it. And I promise you, they're not the only ones that are recognizing this as a problem. The cores recognize this as a problem as well. And they are all absolutely, I believe, making efforts. We can call them good faith. Maybe they're good faith, maybe they aren't good faith, but efforts to modernize their stack and open up some level of middleware to allow you to essentially have more control over the fintechs that you choose to work with. And, so kudos to them, but they're working on legacy technology. It's very difficult what they are doing. It's tough to do that when you're serving out a core to, 4,000 financial institutions. That's its own difficult job just right there, day in, day out. And so, in addition to like working with middleware companies, you've got, for the first time as well, the ability to work with competitive cores that are built from the ground up to do just this for an open banking type marketplace. Companies like Nimbus, others, right? I'm sure you've seen many of them out there. And so I actually think like it's a really exciting time for community banking, because even 10 years ago, you didn't have the technology options in front of you that you have now that enable you to disintermediate yourself from the core and really truly regain the ability to access your data and also work with any fintechs that you want to.
Somewhat related to the cultural question that we had come in are going to be ethical concerns. So I think the concept of using a customer's data in order to provide them with more products might be hard for a board to embrace if that's something that they've never done before. So what can be said as far as the the ethical components around using this data to provide them with more products.
If I could jump in and tell a funny story around that. So the first bank board meeting that I went to, I presented on kind of initial plans to look through our transaction data and find customers who had loans from alternative lenders that we knew they were paying quite a lot for, right? You got an on-deck loan, it's going to be at least 29%, maybe up to 40. Why don't we call them up and see if they want to save some money? And presenting this in the board meeting, and I literally heard somebody say, heresy, under their breath. It's like, heresy? What is this? Like, am I going to get burned at the stake here? Like, and the idea of using data, actually looking into data, to her felt so invasive that it was heretical to what they did as a bank. And the way we got through it, we launched that test and it was wildly successful and we rolled the product out then was just to, again, take the customer's view. Like, we're just trying to save our customers money. Like, if I got that call, I'd be happy. Like, you can save me a couple $1,000s a year. Thank you for the call, right? And so we just got to recognize that, like, yeah, times are different, but we're still trying to do the best we can for our customers. And we just got to figure out how to get comfortable with it. And so long as we're helping them, we should feel comfortable with it.
And another way to move the board along would be discussing that ROI to gain as well. And Greg, your company has some interesting figures on that. So would you share?
Yeah, I mean, obviously, our customers are looking for an ROI, and one of the things about fraud is that there's a couple of places where it benefits. Fraud falls straight to the bottom line, right? So recovering it is an immediately push to income. But what we look for is a couple of ways to kind of characterize that. Back to the conversation around metrics. We look at some interesting stats around what percentage of a portfolio of loans are fraudulent, especially around synthetic identity frauds, where you've got these fake accounts waiting to bust out. And then, to what percentage are we able to capture? And it's interesting because, working with the Fed and some of the other regulators, they're very interested in these stats as well. And as we kind of build out our community approach, so we're seeing capturing things like around 0.2% of the portfolio may be fraudulent, and we're able to recover 40 to 50% of those. It's pretty significant dollars. I'll tell you an anecdotal story as well. The other day, we intercepted a Tesla loan application by a consumer for $92,000, and this person was completely fictitious. Or rather, the identity was fictitious. The fraudster actually walked into the dealership and landed up securing 3 loans from 3 different institutions for this Tesla. And what's more, they would then have, if this was organized crime ring, they would have then taken the car and driven across the border to Mexico. So they would have landed up with, $360,000 worth of gain. And a $92,000, hit, that's something that can really, hurt a community-sized bank or credit union. So we look at the ROI very specifically in terms of like the dollars saved from fraud, and it's very significant. We have a dashboard that shows, based on the investment, in deploying a solution like ours, it shows is it a 10 or a 15 or even a 20x on an annual basis, depending on how effective the fraud we're capturing. The other way we look at the value is and I think there's a bigger theme here around this whole digital onboarding process, and I think that was the first survey that the top category that folks were interested in, and looking at to what extent is cyber fraud and fraud detection creating friction with customers and members when they're coming through the pipeline, and being able to kind of quantify the ROI around that. But I think ultimately, as a fintech, it's incumbent on us, all of us, to prove the value to the community banks and provide some very discrete metrics in dashboards and analysis that can be used, to very easily equate, how much this new technology is saving or increasing revenue for the banks, and we've been able to prove that very significantly.
I'm really surprised to hear Dan's story that he was accused of heresy, because what he was suggesting by looking at transactional data is no more than bankers on the front line are being asked to do manually. And not just on a day-to-day basis, which you're counting on the account manager to do their job properly, and it's impossible to monitor. And but also when you're monitoring files for early warning signals, well, who actually monitors those covenants? So it's all being done for a risk purpose, which helps the bank. None of it is being done in a customer centric sort of way. And what fintechs, what you're seeing, the common thread between all of us here is that we were at banks and we kind of were scratching our heads saying, why is all this being done manually? And I think I was not so fortunate as Dan and Pete to be at a bank where they said, that's great, go and explore that. I was more told to just enjoy the status quo, and I was a top performer in commercial account management and I should continue to excel in that area. That was sort of the feedback that I got. But the results, speak for themselves. The ROI comes when partners are working together and the data is only done by consent. If people are doing screen scraping, that's one thing. If people are getting consent driven, meaning that the businesses or the consumers, regardless of the product or the innovation, are saying, yes, please use this information in order to benefit me, then everything is done from a consent driven approach and everybody wins. So I guess we just need to not call Dan a heretic anymore going forward for these types of suggestions.
I was called worse at times. Heretic was one of the better.
That was fine. We'll make a t-shirt with all the words that you got called for the things you wanted to achieve.
I've heard Dan share some of the names he was called in past times when he's spoken, and they're not FinTech forum safe. They're not they're not proper for this event. Just one last point here. Honestly, this is great. We kind of look like we have a few minutes before we launch our final poll, which will look like a previous poll that you saw. But I want to see if any of these amazing panelists were able to sway your opinion on financial technology. But one of the benefits as well for the fintech working with the bank is the fact that you learn the needs of a bank, and so you can actually, the fintech, the panelists here can actually refine their products and enhance them in ways to better serve you. So Dan, I know you mentioned that you were able to adapt your product based on this feedback. Do you want to share more, or anybody else?
Yeah, happy to talk about it. I mean, I think feedback and talking and sharing perspectives is what lets you figure things out. And I told you some of the stories about the tension and the conflict that there was in our initial work inside of the bank, and we eventually figured it out by all being in the trenches together and just like communicating, and all the tension resulted in success. And I think that lesson is a lesson that any bank can take with fintechs that they work with. There is such a thing as being a good customer and being willing to share feedback. And there's such thing as being able to be a real partner, not just a vendor, and listening to what your customers are saying. Because, if the last year is going to convince us of anything, it's that the world's pretty dynamic right now. And whatever digital solutions we put together today, they're going to have to change over time. And so just good, open communication, even if you're pissed off a little bit and frustrated, or even if you need more, like, don't be afraid to say that and challenge each other. It's kind of awesome when you get in the trenches and just figure it out. And so we just encourage everybody to please be as open and candid as you can with the fintechs that you do choose to work with.
Great. So that actually puts us right around the time we were shooting for. So we are going to launch this last poll. I'm really interested in the results because it is essentially the same question as the first time. Want to see if we were able to get anybody to be a little more fintech forward in the not too distant future. So after this, Stephanie will have more details than what I have, but essentially we'll go into some breakout rooms for about 15 minutes. There is a Wolf person assigned to each room. They'll be the scribe and just kind of get any concerns that anybody has or ideas or ways you've been implementing fintech already. And then we'll come back and briefly discuss those results in a room together. So I'd like to thank all the panelists for their time today. it was, you know, an hour and a half today, and then probably several more hours preparing for it, leading up to it. So really appreciate them jumping on today.
I also just want to say thank you to Wolf. You guys put on incredible panels, and it was at a recent Wolf event that we heard a community bank CEO say that they're running tech firms who happen to sell financial products. Very inspirational for us to hear on our side of the fence. So thank you very much. Oh, look at the results.
Wow.
That's exactly what we were. That's exactly what we were looking for there.
How cool was that?
So, really, yeah, great insight. And then, so strategy, the strategy forum is coming up at the end of June, and I believe what we're going to do there. So we had 4 leaders of fintech companies here today. I believe we're going to get 4 bank leaders for that panel, and we'll have some fintechs in the crowd, and we'll see if any of the challenges that they're experiencing can actually be solved through financial technology. So again, that should hopefully be pretty beneficial to all parties. So Stephanie, are we going to jump into breakouts at this point?
Yeah, so at this point, we're just going to divide up into some breakout rooms. As Rich mentioned, we're going to go through, just really hit on all the points that the panelists had mentioned, have some time to discuss with your peers and collaborate. So at this point, everybody will soon, a box will appear on their screen. It will take you directly to a breakout room. We'll be there for about between 10 to 15 minutes, and then we'll all meet back together just to discuss what each group, the main topics that were discussed there. So I'm going to go ahead and open those rooms now, and you will be directed to your breakout room.